Time now to move to the markets with Leighton.
That's right, Mike. And this week, evidence that cotton prices are trending higher, yet there's also some uneasiness over volatility. Also ahead this week, some advice to slow down on selling new crop corn. The protein content of U.S. soybeans may be a problem. While placements of cattle into feedlots continue to increase, Josh Maples will explain. Well, it is decision time as far as what farmers will likely plant this year. Traders warn cotton growers not to expect an easy ride because of expected market volatility. Analyst Mark Gold seems to be a little more wary of the downside than some in the market. He thinks that will have an impact on the number of cotton acres eventually planted.
There's still a lot of risk in this cotton market. I think this break is going to cause some guys to second guess how much cotton they're going to plant this year. So that may be an issue. We'll see how that plays out. Guys are making their decisions. You've had this drop off in price. You know, there's still a long way down to 55-cent cotton, so there's still plenty of risk out here. But I still think where corn prices are, where cotton and beans are, that we'll see more acres in cotton. The acreage report, I think, is going to be a matter of what's the spring weather going to be. We know the corn-bean ratio is telling us plant more beans. But it's been my experience that if farmers get good weather in the spring, they're going to plant corn.
And the marketing advice for this week for those who do plant corn is be patient. Be a patient seller of new crop corn. John Roach says the selling season is just beginning now this month for corn, so what's the rush, especially given what's happening with a competing country?
We've got a situation going on in South America that really bears close watching. There's quite a bit of the corn crop in Brazil that's not yet been planted. 70% of their corn crop is a second crop corn, and they don't have all their beans harvested yet, and so they don't have the corn planted, and it's raining and expected to be very wet here over this next short period of time. So we think those numbers are going to be smaller. We know the acres are smaller already in South America. Then you have Argentina, which has been very dry and hot. And has stressed their crops, and we've seen those corn numbers be reduced several different times over the past few weeks. So we think that there's maybe something here to drive this corn market further. We'd rather be a little bit slow during this time frame. We can get more aggressive as we get into March, April, May.
Well, in the soybean market, there are reports the U.S. is losing bean market share in China. The reason is a decline in the protein content of American soybeans. Jim McCormick of Allendale says the Chinese feel they get more bang for their buck out of South American beans when comparing protein content. McCormick says no one has a good answer right now as for why the protein content of U.S. soybeans is so low. Well, time for our trivia quiz this week on Farm Week. Here is our question. What country is the United States' biggest competitor as far as soybean exports? Is the answer A, Argentina, B, India, C, China, or D, Brazil? We'll have that answer coming up in a few more minutes. 11 months in a row now. 11 months in a row, the number of cattle placed into U.S. feedlots has increased compared to the same period 1 year ago. Extension economist Josh Maples explains what's going on. Well, how much did placements into feedlots increase in January?
So placements were up about 4.4% over January of last year. So this is about 87,000 head. And this number is really important because it was kind of outside of what pre-report expectations were. You know, most expectations ahead of the report were calling for, or at least the average expectation was calling for about even over placements in 2017, January, compared to this year. So that 4.4% is a pretty big number, and it's outside the range of what we really expected.
So 11 months in a row now we've had increase. Is this some kind of a record yet?
Yeah, it seems like it, right? But you know, we're in expansionary times, and anytime the herd's expanding or has expanded for the past few years, you see these long runs of larger increases into feedlots, placements into feedlots. Now, it may not always be 11 months in a row, but you know, we know the cattle are coming. There were more calves on the ground last year than there were the year before that, so we know we're going to have more cattle coming into feedlots. But we're certainly in a long run of placement increases right now.
So, is this a sign of continued expansion or greater demand, both, or what's going on?
Yeah, so I think you can tease a little bit of both out of there, Leighton. So on the expansion side, especially with cow-calf numbers, we've slowed a little bit. So we had another report come out a few weeks ago, the cattle inventory report, that showed that cow-calf expansion has slowed compared to the previous years. But placements into feedlots is kind of a lagged effect. You get that the next year. And so even though those numbers slowed in 2017 a little bit, the number of calves coming into feedlots has continued to increase. On the beef demand side, the good news there is that feedlots are still current. Even though we've got a lot more cattle in feedlots, the feedlots are still very current, especially compared to some previous high cattle on feed years.
All right, and final question, total number of cattle on feed, where is that running right now?
11.6 million head. This is the largest number of cattle on feed that we've had since March of 2012. But again, the big story there is that even though we're back to 2012 levels, the marketing rates has been strong enough that we're not in a position that we were then where we got a lot of cattle that are ready to be marketed. Feedlots are still current.
And while those feedlots are current now, there are traders that worry about the full pipeline, constantly bringing in additional cattle. Mark Gold is one of them.
We still believe that in the next 6 weeks, we're going to see a lot of cattle coming to market and above and beyond what we can handle effectively, which tells me that guys are going to back these bids off in a big way. We're almost at the contract highs, within a couple of bucks on the cattle. Certainly a good opportunity to lay some hedges in, protect this downside. Hope that the stock market continues, the economy goes, and that we have that demand. But we are constantly facing more cattle, more weight, more product coming into the market. And until we really get into the grilling season, I think there's some significant risk out here.
And we close with the trivia quiz to wrap things up in the markets. The correct answer is D. Brazil is the United States' biggest competitor as far as soybean exports.